you can roll out. Tesla is a great example, right? And I actually like doing this here. So let's do this. Let's go and do. So I've got $15,000 of profit here, 14,800, and I'm selling into strength. So if you look, Tesla is on a run right now. I mean, it's just ripping higher. It's just tagging that upper Bollinger Band over and over and over. And what am I doing? I'm ready to sell it, right? Well, why are you going to sell this thing when it's running up? When are you going to get more money for your option? When it's going up or it's going down? Call option. Yeah, when it's going up. Okay, so I'm watching now. I've kind of parsed it down to the 1 minute chart. I'm looking at this nice breakout. I want to catch as much of this profit as I can, but I also want to be unusually aggressive in my exit here. I'm going to sell as close to the highs as I can. So here we go. There's my next candlestick starting to push a little bit higher. I'm looking for any sign of weakness here. I'm seeing it on the 1 minute charts. We're not able to break above that previous candlestick. If we can't close above that previous candlestick, I'll use this as an opportunity to sell out of that option, and then I'll wait for a pullback, probably to the 5 moving average, and I will look to roll up the chain. So there's the weakness right there. I'm out. Where'd we come out? $14,600 of profit on that trade. So I now have $14,000 to work with, right? So I can come in here. Guys, look at this. I can go back down to one strike out of the money for $6.05. It's going to be $12,000 is what the whole position will cost me. And now I'm just going to come over here and take a look at. Now I'm going to come over here and take a look at my 1 minute chart, my 5 minute chart, and wait for a retracement. Just waiting, like a sniper, right? I got quiet there and everybody freaks out. What's he doing? I'm waiting, right? I mean, that's just it. Now, Jose says you're going to use a tighter stop. So yes, exiting Tesla, Brian, but it's an exit to roll. All I'm doing here is looking for an opportunity to jump in, take $14,000 of profit, right? I'm going to jump back in with 20 contracts. I nailed the exit on this. I'm done, all right? I'm just going to go home now. I can smoke that. Got in at the bottom, got out at the top. Yeah, I'm going on vacation, all right? That was just... So Jose's question, are you going to use a tighter stop? I could, right? But let me ask you this, Jose. If I just made $14,000 and the next position is going to cost me $12 to buy, what's my risk in the trade? What is my risk in the trade? Yeah, there isn't one, right? So I'm looking at the 257.50s. I'm looking at a 1 minute and a 5 minute chart. And guys, here's the thing. If we pull all the way back to the 10 moving average on the 5 minute chart and bounce there, I'll get in there, right? So I'm up $2.50 no matter what, Jose, if the new position costs me 12. Still waiting. Now, I could be looking at other stuff right now, but I want to walk this one through with you guys because I think there's value in just looking at the entry, maybe bouncing at the 5 here. How will I know when it stopped going down? When it starts going up, exactly. All right, there you go. What am I waiting for? On the 1 minute chart, guys, my trigger here is going to be what? Here's a 1 minute chart. This is it right here. What is my trigger if I'm using the 1 minute chart for an entry? What's my trigger? It is a trade above, what? The close above the previous candlestick body. Bullish engulfing. There you go. Thomas says, why not do an intraday synthetic long on Tesla? You could. You get 1-to-1 delta. Nothing wrong with that. Your margin requirement would be the one factor that might impede you from doing that, Thomas, because you've got a a margin requirement, 25% of the strike price plus whatever premium you bring in. Isn't this fun? We're just going to sit here and watch this thing so it either gives us our entry or doesn't. All right, so now, where's my entry going to be? On the 1 minute chart. And again, understand I'm using a 1 minute chart here. You close above that candlestick. Right? And if we get that here, that would confirm a bounce at the 5 moving average, wouldn't it? Now, it's entirely possible, in fact, probably fairly likely, that at this point we start moving into this sideways to slightly down movement that we would expect to see this time of day in the market. Which means that if I wanted to, I could take a deep in the money option with a 65 to a 90 delta here at a 25-cent bid-ask spread, now 20 cent, at the 265 put. Buy that put option and buy that with a stop above the high of the day. Okay, so a stop above the high of the day. And if it goes above 259, I'll get out of my put. Okay. So now I'm in a put because I know that this time of day, what is the stock likely to start doing? Go sideways to down some before we get the next big breakout later this afternoon. In fact, what we know is likely to happen is that this stock, Tesla, after having such a phenomenal, awesome rally this morning that we made, let me point it out, $14,600 profit, and I've got that cash sitting on the side ready to redeploy at the right time to go in and buy more call options for the week for my swing trade with now no risk in the trade because I've used rolling as a form of what? Risk management, right? So now, if the stock should start to meander lower, as they oftentimes do in the middle of the day, and the Bollinger Bands start to curve in, and the stock just kind of starts to wander sideways for much of the day, but with a slight downhill bias before they take off and rally this afternoon or break down this afternoon out of a Bollinger Band squeeze play. The fact is that from here to here, I can make a little bit of money, right? And my stop is up here. And this is a high delta option, right? That's what the HD stands for. Not heavy duty, stands for high delta. So I've got a high delta put that is there and is in place, right, in case this stock just wanders lower. So this is going to be, what trade is this? This is Marquet's fade into lunch. We start breaking higher, I'll get out of those puts, but this would be a place where now, could I take that $14,000, come in and buy the 260 call option on Tesla for $565, be slightly out of the money. I'm going to buy 20 contracts for $5.65. $11,000 was my $11,300 was my investment in the lower delta option, lower delta call option that I'm willing to hang on to for 3 to 5 days, right? Remember, we're looking at a trend here on Tesla. So I'm in here and I'm looking at this and I'm saying, you know what, this thing may move higher for 3 to 5 days. I'll buy a lower delta option if that's the case. And if we move higher, I'll make potentially some more money on that. I made a crap ton of money on it this morning. So I have no risk in the trade at this point. There's no risk to my total account value by trading Tesla call options here because all I did was take the risk that I had on the table, roll it out, roll it up to a cheaper out-of-the-money option, putting money in the bank. And at the same time, guys, it's like I'm playing both sides. I'm burning the candle at both ends here, am I not? I'm pretty good with those analogies. Burning the candle at both ends. I've got put options in case this stock does what they normally do and just sort of drifts a little bit lower, it's a high delta, almost a 70 delta option. Okay. I also have call options. They're lower delta call options because I rolled out of my very deep in the money, very profitable call option. And one of the reasons that I rolled out, guys, is look at this move. Right? From here where we got in to here where we got out. And I can mark those this time because y'all were here. You saw it. I freaking nailed the guy right at the bottom and got out right at the top. So I've taken it. That move was what? Almost $15. Very profitable position in my call options. Took that call off the table. And bought some calls that expire next this week, further up the chain. Everybody with me? Okay, yeah, it's the fade into lunch. Okay, and my stop is going to be above the high of the day. Now, I'll tell you, my stop on the high of the day, guys, is also going to be predicated on if we cannot push through this upper Bollinger Band up here, we come up here and then I'll stay with the trade. Right? Just because it's high of the day doesn't mean I'm necessarily going to exit on the first 5-minute candlestick trade above the high of the day. I've got a lower delta option there. I'm sorry, I've got a higher delta option there, but I've got a lower delta call that will be offsetting some of those losses. So kind of a cool setup.